I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Good afternoon, welcome to GrainTV. My name's Cody Bills. This is Logan Burgess. Today is the 11th and it's a Wazoo report day. We ended up seeing corn trade down 8 cents on old crop, new crop trading down 8 cents as well. Soybeans down 22.5 cents on old crop, new crop down 18 cents, and wheat in Chicago trading down 22.5 cents in December, down 22 3/4. Logan, corn, obviously everything was trading lower here today, but let's talk a little bit about corn. What happened there?
Yeah, you know, Cody, if you take a look here at this slide, as you can see, the ending stock projections by the USDA for 2014-15 came out generally in line with trade expectations. 1.8 billion bushels expected there. That was about 25 million bushels higher than the average trade guess. We saw yield get left unchanged by the USDA today. That's something to watch here as we move into the August report. As we know, growing conditions are exceptional right now, really for most of the Corn Belt. So that is something to keep an eye on. We saw very minor changes on the demand side. Generally an inline report today from the USDA when looking at domestic stocks. The one thing that was a little bit concerning for me was looking at the world stocks number. We saw 5.4 million tons added to world carryout. That was about 3%, and in large part that came from gains down in Argentina. So I think that's something to keep an eye on here moving forward. In general, though, relatively negative report from the USDA today as far as corn is concerned.
Absolutely. Well, let's talk a little bit about soybeans because we saw some significant selling pressure in soybeans as well. Much of that selling pressure was a result of old crop ending stocks in the balance sheet there. What we saw is we saw demand move higher in crushings. We saw demand move higher for exports as well. The unfortunate thing is that I think we saw a real curveball here thrown to us by the USDA when they put a negative 69 million bushel residual number. Now, residual we typically see as a positive number, accounting for demand that we can't really place into crushings or seed use or exports. Right. And we haven't seen a negative residual number here, really. I mean, we saw one in 2011, but we haven't seen one in 22 years other than that one in 2011. Right. That was only minus 2 million bushels. So this minus 69 million bushel residual, a real curveball, and adding about 15 million bushels to ending stocks. That was the main bearish factor here in soybeans, and one of the reasons why we saw August beans trade off significantly relative to November. When you look at the new crop, we did see, you know, about let's see here, it was 415 million bushels ending stocks, and that was below analyst expectations of around 518 million bushels. All in all, you know, that wasn't too much of a surprise. Yield was not adjusted. Acreage was what was reported in the June 30th report. So all in all, nothing terribly bearish there. That seemed to be kind of known information, no big surprises in new crop. And one of the reasons I think maybe we could get possibly a snapback in that new crop contract.
Yeah, absolutely, Cody. You know, both the corn and the soybean market right now are really have exceptionally overextended themselves in terms of price action. You know, a lot of fundamental traders would argue that the sell-off that we've seen really is explained by the ending stock numbers, but this certainly is a market that's ripe for a snapback, both corn and soybeans. Take a look here at this chart. This is the weekly chart of the December corn contract, and you can see with today's close around 385, we're now testing long-term trendline support that was built in starting about October 2012. So this definitely is a market that is ripe for a snapback. When I'm looking at these world carryout numbers, though, and the domestic numbers, there still is downside risk in this market. We mentioned that chart yesterday, going back to 1975. When we see corn carryout where the USDA is projecting it at this year, we tend to see prices in the 320 to 350 region. I would put that as kind of a downside target. So right now, I don't think it's a bad idea to forward sell some corn at these levels, but it's going to be extremely painful if we do get a 50% retracement of this market's move after the June 30th report. For that reason, if I made any forward sales to take some downside risk off, I would want to get a call option to at least participate in some of the bounce back. These markets are due for a bounce back right now. Obviously, the question is, when are we going to get it, and what kind of magnitude are we going to get?
Absolutely, and that's so hard to try and time because, right. I mean, you talk about a bounce back, and it's like, I mean, yes, we could get one on Monday. Right. Yes, we could get one on Tuesday. But before those bounce backs happen, how much further are we going to go down?
Right.
And then, obviously the bounce back, it may not add a whole lot to your bottom line at the end of the year. The bottom line here, I think, Logan, when I talk to producers, one of the things that I'm making a very clear message of is that this year, your marketing plan at this point is going to have to be very detail-oriented. You're going to have to take advantage of anything the market gives you. And that means in the cash market. That means you need to pay attention to the cash market, markets within a 200-mile radius of your farm to be able to take advantage of trucking opportunities, right. especially during harvest and moving out outside of harvest. This is why I'm not as huge of a fan of selling right now in the cash market and purchasing an option. I personally would prefer to purchase either a put or do something in the futures market and leave that opportunity open, because there may be some basis opportunities come harvest that you can take advantage of, right. and use those additional cents that you're able to make in the cash market on those trucking opportunities to finance some of these put options right now. So that's, I think, what I would prefer to see a producer do.
Yeah, absolutely. If you have any questions about that, we do have a great cash marketing portal here at Grain Hedge that all of our trading clients get access to. Basically, it shows you your optimal cash marketing location, both in the spot market today and looking out to the new crop harvest months as well. So it's a great tool, as Cody said, to really make sure that you're making the most out of every cash sale, because obviously when we see December futures trading at 385, it's all that more important that every cash sale is as profitable as possible. So if you have any questions about that, feel free to call our office. Number here is 877-472-4607. That kind of wraps up what we saw here Friday for the July WASDE report. We'll have to see what Monday brings for this grain market, but in the meantime, have a great weekend. We'll see you on Monday.